We are in a housing recession. Check out this article from Politico. I will have a link to this article down in the description below, but basically the moral of the story is more and more articles are coming out every single day about how we are in a housing recession. And like I've said right now, there's still some conflicting articles out there because basically prices are still generally really high when you compare it to 2019. So we're still in the bubble and things are kind of slowing down, but prices are still super high. And a lot of people, as we're looking at the data, basically it's coming down to supply. We have very low supply and now we have high inflation. And basically a lot of people, there's a lot of smart people out there that when they owned the home in the last 2 years, they refinanced to a super low rate. They're not motivated to leave their house right now to jump into something more expensive with a higher rate, right? So we have that whole thing going on. And, there's a lot of people that are semi-positioned pretty well and they're holding on to their property, right? Because, it's when you have times of high inflation, you don't want to have cash, right? You want to have assets like properties. And that's sort of what's happening right now. So it's keeping prices high, but what the fear is that we are already slowing down basically on there's a lot of indicators in the housing market that are showing signs of recession. Like contractors are just not getting the jobs that they were before, right? Because the cost of labor has gone up, the cost of materials have gone up, and the cost of borrowing has gone up. Believe it or not everybody has, $20, $30, $40, $50,000 for a kitchen remodel. So a lot of the times they have to go to the bank, borrow money, and whether it's the bank or Home Depot or whoever, you go to these places, well, they're not giving you those 0% that they were giving you a year ago. Now rates have gone up. So people are going to hold off because now they're paying more for the remodel, right? So again, you're seeing signs that, we keep hearing that builders have stopped building, right? Because the price of land is too expensive, labor is too expensive, materials are too expensive. So we're seeing all these things happen right now. And all these are indicators like, yes, we are in a housing recession. But what are we not seeing? We're not seeing the prices drop. Now, there are signs, okay, if we go into the Redfin weekly housing market data, yes, the prices have dropped from the peak, okay, totally, 100%. But what are they not doing? They're not way down where the 2019 levels, where they're more, like after what has happened, we should, look, if everything was perfect, okay, if we were living in the perfect world, we would have been closer to 2020, maybe like around right here between 20, like a little bit past 2020 in a normal market, right? You would have had decent, good growth, especially with some of those tax cuts that we saw there at the end of the Trump presidency. So with that said, like, look how much more overvalued it is, right? We're overvalued probably, in general, they're saying by quite a bit. Some markets, they're like 50, 60, 70% overvalued. But as a whole, right now, we're probably overvalued by about, $80,000, right, on average. Now, the problem, this is for the whole United States, but the problem is that because we went into coronavirus, because we shut down, because we lowered the rates, we created inflation, and that has created a huge monster that basically we're going to start seeing the effects on this, because to bring down inflation basically means you need to bring down the economy. You need to bring down the flames of the economy, right? The fire. And when that happens, we're going to see, slow growth. We're going to most likely see some layoffs. And that, we don't know what that's going to happen, what that's going to do to the overall economy. And, many have been predicting, like I have been predicting on my own opinion, that we're going to get down to 2019 levels, maybe even below, because, when it goes up too high, the crash could be pretty severe. But we're going to see how it all pans out. I mean, you never know what the feds are going to do. If we start seeing layoffs, are they going to print more money? Are they going to kick the can down the road a little bit more? I mean, it's kind of like a moving target. And, that's what in many ways makes me interested in this. It's, why it makes me want to go back and and basically read more every single day, because it's really interesting to see how it all moves. And for the most part, I guess that's why you guys are here too. Now, when you read this article, I kind of just like to look at the quotes. Basically, here is a chief economist for home builders. I think we're in a housing recession. After a year and a half of post-COVID housing strength, this is not just a retrenchment to a more normalized strength. This is definitely a weakening. So again, you just kind of scroll down this article and you pull out these quotes, and they're, here's Goldman Sachs saying, further to fall. We made a video about this already. It's kind of nuts, right? We have, right here, check this out. Let's read this quote. Housing prices were elevated going into the monetary policy change, and this is a big interest rate shock, and we're seeing. So again, we know about this. We know the Feds had to raise rates to lower inflation. Now, is it working? Inflation report's going to be coming out pretty soon, guys. So we are going to see now, in many ways, we want everything to go back to normal, but we also want prices to go back to normal. Now, it's all based on supply and demand. So we need to make sure that inflation starts coming down, guys. So that's going to be a big, big report coming out soon. Now, if inflation is high, oh boy, let's see what happens. It's going to be kind of crazy. Like basically, I think we're at 8.5. So we were at, that highest was, I think, in June, 9.1. We brought it down to 8.5. If we are, my guess is that if we stay on 8.5 or around 8.5, like a 0.1 point, like 8.6 or 8.4, then I could definitely see like the markets reacting very negative towards that. If we could get into the sevens, even like a 7.9 would be amazing, because that shows that we went down a whole point in just like 2 months. So that would be great. Now, if we are anything like back to like that 9 level, I think we are royally screwed, to be honest, and it's going to definitely shock the markets. So again, this is a great article. It's sort of doom and gloom, but that's kind of how it's looking right now, right? Like there's like the housing market is slowing down, right? Like things are more expensive out there and people are starting to get squeezed. So we're going to have to just see how this all plays out. But I definitely encourage you guys to go in and, check out this article. And yeah, it's kind of crazy out there. Now I'm going to go ahead and finish this video. Now I want to say thank you guys so much for watching my videos and supporting my channel. You guys have been, really been the reason why I do these every day. Thank you for commenting. Thank you for liking my videos. It really does mean a lot to me. If you're new to my channel, and you like what I have to say, please don't forget to smash that subscribe button and go ahead and like and leave a comment. Again, thank you guys so much for watching. I love you guys, and I'll see you on the next video.